The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 1st Turn Down Tuesday edition of today's Trader's Edge show. Hope everyone out there is having a great day. Let's make sure we do everything we can to have an extraordinary Tuesday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little shift, that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, we're going to go look at the circumstances that the bulls and the bears, the buyers and the sellers, are communicating to you and I. We'll go try to figure out what those circumstances mean with the Dow being off 410 points. I'm absolutely grateful for your presence here. I'm here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. Of course, internationally, you can call us at 727-445-1044. This is Terrific Tuesday. Of course, none other than Tiger Financials Network. I'm Steve Rhodes. Welcome to the show. As I say, the Dow is off 412 points. She's trading at 16,115. S&P down 50 points at 1921. NASDAQ Composite off 110 at 46.65. Russell's off 25 points. She's trading at 1134. Gold's up $8. Silver's flat. Light sweet crude is off 356. Natural gas down just a tad out here. We've got lots to go take a look at, so let's go ahead and begin. How are we going to piece this together? Is really the question. And so I think the easiest way for us to do that is it's 1:08 in the afternoon. So we've got a couple more hours worth of trading, 3 more hours in essence worth of trading out there. Let's take a look at the Qs out here. Let's start off and just look at the ETF structures and see what they're doing and what numbers you want to be paying attention to today. So we've got a clean chart out here. As we take a look at the QQQ series ETF, we know made a high volume low out here as it typically does. And this was the low here on August 24th, 150 million shares. That was last Monday. So you've got massive volume down there. Now, prices traveling inside of that swing point, just barely. The top of that is 102.53. So let's go ahead and let's mark that. We know we're going to have light volume today compared. Whoops, I got to mark the right swing point out here. Give me a moment to do that. We know we're going to have light volume, at least comparatively speaking, with regard to the swing point that it's trading in. Volume today, 37 million shares. You know, even if we just double it, which would not be correct, you'd be at, what, 74 million shares out there versus 150. And maybe it does 74 million shares. I don't know what the actual volume's going to end up at the end of the day. I do know that if, in fact, the Qs were to stage a turnaround versus turn down Tuesday, that means close above 102.53, you'll have a test of a swing point on lighter volume. You'll have rejection on both price and volume. But 102.53 is the key number inside of the QQQ series. If, in fact, it doesn't do that, then what you're taking a look at, and it continues lower. So if you close inside a swing point, volume or not, you can go down and you can actually test the bottom of that. Well, the bottom of that would be after it has to, in order to do that, it's got to get through a couple of retracement levels. The first one is 97.88. Now you're trading at 101.80, and with all of the all of the price movement that we've seen inside the market, the Qs have not even made a 0.382 retracement of their bounce move. We're going to take a look at both the bullish and the bearish side. We've got to be able to do both of those. But the reality is, if you reverse this around and you didn't come to this with a bias and you took a look at it, you say, my goodness, this hasn't even done a dead cat bounce. That's right, a dead cat bounce inside the Qs gets you to 97.88. That's why this whole thing about, you know, some greater than 10% being a correction. Are you kidding me? What is it that these people actually drink out there? What is it that they come up with? The reality is both you and I know that normal markets will make a 62% retracement. Forget about 10% out there. Anyways, let's not focus on that. Instead, let's focus on what you and I do know, the secrets of pattern technology recognition that both you and I know. So the Qs have not made even a dead cat bounce to the downside out here, and volume is light. Doesn't mean they won't get to 97.88. Doesn't mean they won't even get all the way down to 84.74. Right now, what we've got is decelerating volume on the way down compared to that test. Of course, that's going to be pretty hard to do. That's going to be pretty hard to do, is to bust out those lows with volume. Not that it can't, but 151 million shares, that one's going to be a tough nut to crack. Again, the key number to watch is 102.53. Likewise, if we take a look at the move, let's get rid of, let me just do this here. Yeah, let me just delete that. If we take a look at the move from the high to the low, meaning that we're going to come back to the July 20th high, all the way down to the August 24th low, you can see that, as we were talking about yesterday, you're still traveling really right around the 0.618 retracement level. You got it just a tad higher. You know, typically the market should have made its way up to 108.04. Doesn't mean that it won't. But this could be the beginning of an A to B equals CD to the downside. But first, it's got to test out. First, it's got to get below 84.7. Hey, first, it's got to get below 84.74. But it's got to at least get to the dead cat bounce area. So that's what's going on inside of the Qs. Now, if we switch over, I'm going to switch over the futures contract. We'll do this back and forth in order to get a good feel for what's going on inside the markets. We'll switch over to the NQ, and we'll take a look at the 30-minute contract out here. As we take a look at it, give me a moment here to refresh the screen. What you'll see is, when I take a look at, well, first of all, as the market was pushing lower this morning, this is a 30-minute chart that you and I are looking at, it was pushing lower with less relative weakness out there. And it created a divergent pattern. Those are typical patterns that identify where the market is going to bounce. And that, certainly we have seen that thus far. Take a look at the low that formed at 9 o'clock this morning. As price was moving down, it was doing it with less strength. I like to say on the way down, it was doing it with less weakness out there. As well, it was forming one of those nice seventh wave moves, those G-type moves. You and I like to sing in the key of G. We respect the key of G out there because oftentimes that's where the market will go ahead and make a turn. Why? I don't know. I just know that it does, and you've got to pay attention to it. Then what do you have take place next candle session? A little piercing candle, some follow through on that next session. But we haven't seen a ton of a bounce out here. So if the market takes out the lows that we saw here at 9 o'clock, by the way, inside the NQ, that was 41.47. That says that you're going to see lower price. That says that this will have recycled to the downside out here and taken out a pattern that should hold as a bottom, at least a short-term bottom out here. Now, that's what the 30-minute chart is communicating to you and I. So we know what we've got to watch. If we go take and we step it up just a little bit, we jazzed it up to the upside with a 120-minute time frame chart. Here's the thing. If that 30-minute chart gives way, you and I are going to have to say, something to think about. Why? Because off of the high that took place here in the NQ at about 10 o'clock in the evening back on August the 27th out here, since that high on the 120-minute time frame, any lower low that we would see during the day out here will actually get you to a key of G on the 120-minute chart. So, as Lee Corso would say, especially as we come into the college football season, not so fast. Now, if this forms the key of G and then gets below that level, then you're going to have a movement. I'll give you some price. In fact, I'll do the pricing on the 120-minute chart over here. Let me just do this. Let me do this. Let me just add another page out here. Give me a moment. We'll do that. Let's put the NQ out here. And this way it'll be a little bit easier for me to go ahead on this blank screen to go ahead and give you the retracement level. So if the key of G fails out here, then as far as where the NQ is likely to trade to, if we just take a look at natural retracements from low to high out here, what we're going to see, you can see it's really, in the NQ, it's done on the 120-minute time frame, about that dead cat bounce at 0.382. What you're looking at is 4073.47. That's the next level down, and you're at 4163. So that's what you want to be watching. So there are signs of, if in fact the buyers, the bulls out here are going to take hold, we've got the signals that the opportunity to do that exists out here. Now that is taking a look at the NQ and the QQQ series ETF. Let's go ahead and make our way back in, take a look into the market and take a look at the IWM. Let's go look at the Russell 2000. You got the index down 27 points, the Russell itself down 273. You've got 21 million shares. If we do really the same thing out here, now in the case of the Russell 2000, it has only been outside of that swing point from last Monday for, it looks like, 2 trading sessions. 83 million shares nonetheless. If we go take a look at the Russell and look at the retracement that it's done thus far, so from the low of last Monday to the high here, looks like a slightly higher high was put in yesterday, you are just slightly below the dead cat bounce at 0.382 retracement level. Now, volume-wise today, 22 million shares basically going into 83 million shares. Again, you can see light volume. Nonetheless, when you close inside a swing point, you most certainly can go down and test the bottom of that. However, the next stop on this ticket, on this bus ride, if you will, is 111.21. And that is the next stop for the Russell 2000, for the IWM. But let's go over and take a look at the 30-minute chart here. Again, the same thing that we did in taking a look at the NQ. And on the 30-minute chart out here, you can see it made that nice little Rhodes price relative strength divergent pattern up here as it made its high back at about 12 noon. I would presume that was on August 31st when it made that high. It's a wave count to the downside only in wave number 5 out here. So it's interesting, when we take a look at the Qs versus the IWN, I can make the case that the IWM, at least with regard to wave counts, is a little bit stronger than we took a look at in the Qs. Is there anything out here that gives us any kind of feel on the 30-minute chart that there's a bottoming pattern, the type that you and I like to look for? The answer is no. There's no key of G. There's no price relative strength divergent pattern out here. 2 of the great patterns that you want to pay attention to. On the 120-minute time frame, this is where you really start to see strength inside the Russell 2000. It's, remember, the NQ, we took a look at it, potentially in its 7th wave to the downside. The Russell 2000 only in its 3rd wave. Now, there's a 10-minute delay on this chart out here, but even at worst case, it's in a 4th wave to the downside. Still no price relative strength divergent out there. So the NQ giving us a better signal. And that's where you would want to see a signal of any bounce, because the Russell's not going to lift all boats higher. It's going to be the NQ, the ES out there, the S&P futures contract. So that takes care of the Russell. Let's go take a look at what's going on inside of the SPYs out here. SPYs are off $5, 132 million shares. Pretty good volume inside of the SPY under normal circumstances. We're not dealing with normal circumstances out here. Let's take a look at what they're moving into. August 24th swing point. A half billion shares out there. 500 million shares on the trading day of August 24th. You're at 132 million as we speak right now. Way light on volume. Nonetheless, it doesn't look to me like this is going to be a rejection of the swing point, that being the high of 195.84. As long as you're inside there, you can go test the bottom. But the next step on the ticket, on the way down, if there is a next step on the way down, would be 189.06. That would be your 0.618 retracement level. If it continues to move lower on light volume, just as well as somebody can go ahead and try to make the case that there's an A to B equals CD to the downside, you've got to also make the case there could be an A to B equals CD to the upside out here. Where it comes from, why does it work, I don't know. But we know just simply from volume analytics out here, price pulling back on light volume. If we go look at the 30-minute chart here for the futures contract, well, we're going to have to wait until we go pay for some of, well, we go get some of these commercials. We go ahead and collect some of those dineros out there. But you can see on that 30-minute chart a price relative strength divergent pattern. Maybe we're going to get to that key of G, maybe even during this hour. Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Back to the ES Mini. We were trying to take a look at the 30-minute chart here for the S&P futures contract as we were going into that break. So we can see this morning at 9 o'clock, prices were pushing lower. Great price move, but not the type of energy associated with conviction to go to the downside. What did we see? You know, the bulls, the buyers, were shut in. I don't know if there was any short covering. Who knows what it was? What we do know is that the buyers saw an opportunity to go ahead and step in. Now, we're dealing with wide, so intraday, there are some amazing trades out there. I mean, in a period of moments, you can pick up 20 points out here easily. Now, with regard to the ES Mini, moving down, less relative weakness on here. You had a nice little piercing candle and some follow through that took place between 9 and 10 o'clock in the morning. Ran into the resistance level at its TAS market profile high in the 1931 level. If price moves lower, which it looks to me like it really would. It should go test the low here from earlier this morning. Inside the ES on a 30-minute basis, you get to that seventh wave. You need to really see that thing recycle to the downside in order to let you know that, hey, that these levels of support are just failing. Look at what took place out here recently up at the high. You'll see one of those seventh wave patterns, price relative strength, divergent pattern that occurred out here. This is at 20, 30 hours back on, looks like at August the 27th out here. So they they are absolutely worth paying attention to. Remember, when we show up at the show here, we check all of the fear and greed at the door. We just simply look for chart patterns, those patterns that work really well to understand what the market is actually doing. If we take a look at the 120-minute time frame, see where we're at with regard to any divergent patterns out there, you're only in your fifth wave to the downside. If, in fact, price moves lower, you're looking at a price point in the ES down to about the 1904 level, 1905-ish level. That's your 0.618 retracement to the downside. If that area fails, you're looking at 1880. So that's what's going on inside the S&P futures. Let's go take a look at what's going on inside of the Dow. Oh, that's interesting. When you're doing a live show, you don't like to see that little circle. There we go across your screen, because that means something is wrong. But it looks like we're back to trading. Let's go take a look at the diamonds out here. So as we take a look at the Dow diamonds, to the downside, last Monday, 35 million shares. Today, 6.8 million shares. Look, even if we go ahead and exclude that volume from Monday, let's just compare Tuesday to Tuesday. Tuesday, in essence, was trying to push higher. That was with 19 million shares versus 6.8. If you take a look at the next day, 19 million shares on August 26th versus today pulling back with 6.8. So you've got light volume. Here's the issue, though, with regard to the Dow diamonds. And really, as you and I have taken a look at all of the ETF structures, you're inside of that swing point from August 24th. That says you can go test the bottom. Now, in the case of the Dow, of 400 and some odd points, somebody would think the sky is falling. But, folks, let's put this in perspective. See, the numbers we're dealing with here, this is the law of large numbers out here. It hasn't even made a dead cat bounce. From the low, from the bottom of last Monday to the high that came in a couple of days ago, we're not even at that dead cat bounce in the 160-ish level out here. Something to think about. Any moves to the downside, though? Lower. Look at the next area to be about the 157 price point. That is on the ETF structure. If we go take a look at the 30-minute chart out here for the Dow futures, you're going to see they were pushing lower with less relative weakness out there and have since bounced. We're only in the fifth wave, so we can't look for that pattern to go ahead and give us any kind of bottom signal, but you've got one of the better ones out there in any event where price moves lower with less relative weakness or less relative strength out there. If we take a look at the 120-minute time frame, it does have a seventh wave move to the downside. So therefore, maybe it's really the Dow futures that give us an idea if the market's going to continue to push lower out here. Because in this case, taking out this morning's lows inside of the Dow, let's go switch back to this chart, a little bit easier for you to take a look at. Give me a moment to go ahead and cue this up. ES, let's put in the, these are the 120-minute time frame charts that are showing up on my screen here right now. Well, they will if I put a space in the right spot out here. Come on, work with us. There we go. As we take a look at it, going from low to high, and there's, two lows we can use. We can come all the way down here to the actual low of last Monday, and what you'll see, you're just hanging right now right around the 0.382 retracement level. So any move lower below the price point of 16,057. So far during this 2-hour session, you've gotten down to 16,065 versus 057. Not a lot in points to the downside. If it does take that out, I would say, hey, you know what? It's probably the Dow that's giving us a message that prices will go push lower. Inside the Dow futures, that takes you to 15,819. You're at 16,101. That's a pretty good move. That's another 300 points to the downside inside of the Dow. So hopefully that gives you a perspective. So where are we? You've got potential bottoming patterns out here inside the 120, inside the 30-minute charts, and you're pulling back on light volume. When we come back from this break, let's go take a look at the GDX. Let's go see what's going on with the miners out there. We'll take a look at Goldilocks and silver. Happy to take your question as well. Just give me a call at 877-927-6648. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's, she's off 393. S&P's off 46. The NASDAQ Composite down 98. The XAU, the HUI, relatively unchanged out here. Gold's up $7. Have a request to go take a look at the GDX. So let's go do that. Let's start off by taking a look at the GDX. We'll look at it monthly, weekly, daily, any time frame that we can find out here. We'll use a number of different tools. So the first chart up on our screen here for the GDX is the weekly chart. And as we take a look at it, the actual swing point, the swing point low, where we made the lowest low, is the week that began August 3rd. Now, the volume on that swing point is 292 million shares. Now, that low, which, by the way, was 1301, was tested. It was tested last week. Got down to 1296. Volume on that was 500 million shares. 507,516,095 to be exact. So what do we know? We've got a test of a swing point low with volume. Typically, that says that you're going to go back down and test it. If you're going to make the case, when you take a look at the Qs, the IWM, the SPYs, the Diamond, that you've got a swing point low and you're trading inside that swing point, says you're going to go back and test it, well, it would apply here as well. However, at this stage right now, what we know on a weekly basis, and it's just the early part of the week, is that the GDX is not traveling inside that swing point low. The high, which it has tested, it's tested today or yesterday. I don't recall, I'm on the weekly chart right now. The high is 1364. You're trading at 1398. The low this week so far has been 1359. So you can test the high of a swing point and reject it. You won't know until Friday. And if you can do it with light volume so far this week, 77 million shares, again, going against 292. If I do decent math on that, sounds to me like you're coming into light volume. You won't know if the GDX has formed a bottom until it rejects that high of 1385, at least to be able to put the odds in your favor that on the weekly basis that's what it's done. If we go take a look at a monthly chart out here, since the month just ended yesterday, let's go see what we've got going on here. In the monthly chart, the monthly chart will come all the way back into the 2008 time frame. And on the monthly basis, the swing point that you're dealing with is from the month of October 2008. Now, volume there was 167 million shares. Forget about trying to benchmark volume from 2008 to where we're at now because, hey, last month you did 1.6 billion shares out there. So let's not really worry about benchmarking it. What you and I know is that the GDX is traveling below 1583. So that's never really good news. If the GDX had made a significant bottom, or when it makes a significant bottom, if it does make a significant bottom, what you want to see on a monthly basis is a close back above the 1583 mark out there. So the monthly is not giving us a ton of information out here. If we go take a look at the daily chart, we'll look at it from a couple of different panel views out here. First, if we just simply go take a look at our counts to the downside, I've got it as a potential tidal wave G down here that was formed just a few trading sessions ago. So that says to me that the low that took place out here on August 27th is very important for the GDX to hold. If it gets below that low, then it says that you've got trouble in River City. If we switch back and just simply take a look at daily volume inside of the GDX, what does this show us? Well, if we take a look at the swing point low that was tested, that was August the 5th, that had volume of 41.7 million shares, and that was tested with 97 million shares back on August 26th out there, then 111 million shares the next day. We don't have on a daily basis a test of a swing point low with light volume out here. So we don't have any test of a swing point with light volume inside the GDX. Now, what you and I know, though, is that in trading the GDX, number one, it's a basket of equities. So you really need to go take a look at the top 10 equities inside the GDX, like Barrick Gold, Gold Corp. I don't have them off the top of my head. But we would really need to do that in order to get a, is it going to give us a different picture here? It may. So that would be one thing that you want to do. But the other thing that you must do in trading the miners is have a good idea of what gold is doing. Although I don't have the chart here, I'm not going to go ahead and open it up. You and I have looked at it a number of times, and what you and I know is that gold's not going to move, the miners are not going to move in a northerly direction if gold's moving in a southerly direction out there. The two of them like to play, like to dance the tango out here. Sometimes it can be the can tango. No, it's usually the tango out here. So let's go take a look at gold. What is gold doing? Well, if we look at gold on this chart, we take a look at the December contract just to get a feel for what's going on. One of the things that you and I know is that gold had one heck of a nice bounce out here off of this nice little, there was your reversal, your key reversal session. Let me just blow this up on my screen for you. The gold made a low back here on the trading day of July 24th. Gets down to, let me move this off to the side. It'll make it a little bit easier for you to look at. On the GDX, I can go back and actually add in our market profiles as another tool. But let's just shift forward here to the actual gold contract. So back on the trading day of July 24th. Don't pay attention to the volume back there because it was probably the September contract that trading day. I'm not going to go back and forth. Here's what we do know is that gold had made a bottom back on July 24th out at 1073. The actual signal, if you look at these candles here, that gold had put in a tradable bottom took place on July 31st. This candle right here, known as a key reversal session, right? You got to have three things in order for it to truly be a key reversal worth paying attention to. Price has got to be extended. Well, shoot, gold had been extended to the downside, so it accomplished that. You can use a number of different tools. It was extended. Number two, you need to exceed the prior day's high and low. Gold did that on that trading session. And number three, you just need to close one tick, 1 penny, 1 pip, one whatever it is that it trades in, 1 quarter. You've got to be able to close in the opposite direction, and that's what it did. In this case here, it does help to have a green candle. Did that put in the bottom? It put in a nice bottom. Now, that bottom didn't actually start moving until we had a full moon. I believe the full moon might have been August 7th. Maybe it was August the 6th out there. That was an initiation move. It initiated the move to where? The top of the trend line out here. I mean, hit it like Johnny on the spot. I don't even know where that comes from. Somebody ought to look that up and let me know. I say that to my buddy Johnny all the time. In any event, that's what it did. It moved right up into that trend line. Gets up to a price point. You can see that now that's a trend line, by the way, for those of you not watching us on TigerTV. That was the trend line coming off of the high out here from January 22nd. That's your first touch point. Touch point number two was May 18th. That touch point was priced out at 12.34. Now, what you'd like to see in areas where you identify support and resistance, in this case here, pièce de résistance, you'd like to see at least 3 touch points. Well, the market delivered. Not only did the market deliver by getting up to that level back on the trading day of August 24th, guess what it did up at that high? If it did it at the bottom, it can do it at the top. It gave you a key reversal session. Look, you got the exact same things. The market had extended itself. We could take a look at A to B equals CD patterns out here. It had extended itself. You had a prior day's high and low that was exceeded, and you closed in the opposite direction. That was an indication. That's when my clients and I, we actually got out of the trade a little bit earlier than when it confirmed that key reversal session. That's when we went ahead and dumped our long position in Goldilocks. Actually, I think we might have waited a little bit on the GDX type trade out there, but we took a small gain on that and a nice gain inside of the gold trade. Now, what is gold doing? Hey, it's up $5 or $6, something like that. Now, here's where you'll see. If, in fact, we had a full moon come in right on Saturday, beautiful full moon that came in on Saturday. It was the following day on Sunday was perigee. That's when the moon is closest to us. So that's why it looked like a super full moon, a big full moon out there. Oftentimes, they can be an initiation point. Was today the initiation point out here? I don't know. Not much of a move. Here's what will take place. If Goldilocks, because it's not just you and I taking a look at this trend line, if gold can get above this trend line, there will be an initiation of orders going into gold. So you got to be fast on your fingers out here. An initiation of orders, because traders around the globe will know that gold is giving you a breakout message. If gold breaks out, I can tell you, wherever the GDX is trading, that it's also going to move higher. So we don't have a clear message here in gold that it wants to move higher. We just don't have that. And so that's what you would need to do. That's what you do need to do in trading those vehicles if you want to provide yourself with the best information out there. So I hope that answers the question inside our Tiger's Den about the GDX. Of course, you'll want to go back and take a look at least the top 10 holdings to see how they are trading and what is going on there. I would also suggest a couple other things, like understanding where gold is priced in relation to euros, because that may be the real answer to that question out there. Now, let's go take a look at a few other things out there. Let's go take a look at silver. Let's go take a look at high-hole silver, see what it's doing. It's up 2 pennies out here. Looks like this chart's been pretty well populated over time. Doesn't look like I've looked at this chart here for a while, so let's go ahead and get rid of some of the things on here. We see that silver had broken through its downtrend line out here. Of course, it came back inside it back on the trading day of August 26th. We see some small-bodied candles. Here's the problem with silver at this stage of the game. Give me a moment to just delete that. You see, we had this nice little downdraft session out here. From the let me just do this. Let me put lines across it. The body of this candle is really important, and here's where we'll get a bit of a message. Right now, I'm looking at the bottom of the candle, the body of the candle from August 26th out here. You can see the body of the candle's been tested. Most people would just look at the swing point high. In fact, the swing point high has been tested. That was 1470. You've gotten up to 1471 today. hasn't been able to break through that level. So it's not really providing you or I with a bunch of information. You might take a look at it and say, hey, the last 3 days have been higher lows. So or the last 4 days have been higher lows. So I'll give you there. Here's the deal. If gold doesn't break out, silver is likely not going to break out. Not that it can't, but it's likely not going to break out. But if it does get below 1404, what you're going to have is a continuation move to the downside in silver. So, this puppy is uncertain as to what the message of silver is and what it wants to do. I do know that gold is up against some really major resistance. And so you and I want to pay attention to that because we're not that far off of the bottom where it would be a great time to be able to jump in if, in fact, it can take that out. But we're not getting the message here inside silver that it's ready to do that just yet. If we go take a look at light sweet crude, we've had a lot of movement there off of the bottom. Off that bottom that came in last week on August 24th. That low was 37.75. So far today, a pullback with some pretty good volume. But the reality is, if you take a look at today's candle session out here, what you've got is an inside day. Now, an inside day says that you trade the entire day within the candle, doesn't have to be the body, within the candle of the prior day out here. And that's what, in fact, light sweet crude is doing as we speak right now. What does that mean? That means that the trend is likely to continue. So even though you've got the pullback and people getting their skirts in a tizzy out there, my apology to skirt wearers out there. And I'm not really sure where skirt in a tizzy comes from either, but we probably ought to look that up. What we can see here is that maybe it shouldn't be in a tizzy because maybe really all light sweet crude is getting ready to do is move up to 54.43. It's 0.618 retracement of the move off of the high from the trading session of May 6th down to the low. Inside bar usually means, I wish I could give you a percentage on it. I just know from watching the charts and taking a look at them that inside bars oftentimes are nothing more than a continuation of the move that price just came from. So that is the message inside of light sweet crude. If we take a look at a couple of stocks out here, we'll look at some currency pairs, but let's go take a look at a couple of stocks just to switch things up. Let's go. In fact, let's take a look at a couple of gold stocks. Let's go take a look at Rand Gold. That's up 18 cents on 548 million shares. See if we can get any kind of feel out here. And the answer is nah. Not really. What we know about Rand Gold is its swing point is July 27th. It had 1.2 million shares. Price came back there with 1.1 million shares. Hey, that's not too bad. That was on August 26th. 1 million shares on August 27th. Let's just draw the line. Let's just do that. Let's go test this out. Now, Rand Gold, I believe, is in the top 10 holdings inside the GDX. Correct me if I'm wrong out there. But if we take a look at it, we've seen a rejection of that swing point with pretty much light volume, including today. So Rand Gold, maybe as opposed to the actual GDX, might actually be a better setup than the GDX because here you do have a test and a rejection of a swing point with lighter volume. July 27th, high, 59.67, tested yesterday with 516,000 shares on less than half the volume. Not too shabby out there. Today, 549,000 shares. So that looks pretty good. Your stop would be somewhere, at least below the low of July 27th, which is 57.06. Let's take a look at a couple other ones. You've got Gold Corp. I know that's in the top 5 holdings. Let's go see what Gold Corp is doing out here. Let's draw a line on the bottom of its swing point. That swing point being the trading session from July 24th out there. That had volume of 21 million shares, and that was tested. He closed below it with 15 million shares on August 26th. He immediately rejected it the next day with 11 million shares. So that was 11 million shares going against 21 million shares. You tested it yesterday with 9 million shares. Hey, guess what? Gold Corp here. See, this is why when you trade an ETF, you really got to go. You really got to. Where's got to go? What kind of horrible verbal language is that? What you really need to do, that sounds a little bit better, is really take a look at the underlying instrument. Take a look at what makes up the weighting inside that structure out there. Because what you might find along the way is you may say, you know what, I'm going to create my own little basket of my GDX, your Stevie GDX out there, and just go ahead and, instead of making a 1% risk, make it a 0.25% risk or something, 0.2% risk, and get a basket of 5 stocks out there and have your own version of the GDX out there. So you've got Gold Corp rejecting a low. What else? Barrick Gold? I think Barrick Gold might be a part of it. Let's go see what Barrick Gold is doing out here. I'll have to do this quickly in about 15 seconds. Its low was August 5th. That had 18 million shares. That was tested and it was tested with 23 million shares yesterday. And it says Barrick Gold probably gets down and tests that 652 level. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 378, S&P down 44, Composite off 95. What great markets we have out here for trading. There's certainly action going on. Action Jackson. Let's go take a look at some of that action in some of the individual stocks. Let's go take a look at the leader dollar-wise to the downside. That's Priceline.com. She's off 23 bucks as we speak right now, trading out at 12.25. What do we know about Priceline? You know, Priceline is trading inside a consolidation, somewhere between about 1108 to the 1300 type area. In the case of Priceline, this thing broke out with some big volume back on the trading day of February 19th, 2.6 million shares. Price came back and tested breakout area with 700,000 shares out here, tested it in essence with 800,000 shares on July 8th. Price goes up to the top of the consolidation, nice big gap up with volume. Said at some point in time, Priceline likely to be up to test that level, which is at the 1395-ish range. What have we seen so far? Look, even in the market last week with the big pullback, Priceline, you know, volume of 1 million shares to the downside. Not that big of a deal, and never even got back to test the swing point, the consolidation area right around the 1136 range. So today's volume inside Priceline, 316,000 shares. It is testing, and as we speak right now, it is rejecting the August 24th level, and that's got 1.1 million shares out there. So there's a rejection of the most recent swing point on Mucho Grande light volume. Now, that probably makes no sense out there, but just let's go with the flow. Let's go with the flow by taking a look at Google out here. As we take a look at it, what did it do last week? Came back and closed the gap. That actually creates a nice little support area, potential support area, and that's the high from July 16th. That's out at 580.68. We saw Google move up with big volume, 11 million shares, and pull back in that breakout area with 5.7 million shares back last Monday. What is it doing today? Well, today it's trading inside that August 24th swing point. That needs to get above 614. Otherwise, it can go down and test the 565.05 level out there. That's what's going on inside of Google off 14 bucks. If we look at Amazon, AMZN being the ticker symbol, it's trading down here this afternoon. It's trading out at 501.73 with 2 point. Almost sounds like a IRS form, does it not? It's not a 501.73. What is it, 501c3, something like that? If we take a look at where Amazon is trading into, pulling back today 2.2 million shares. Its swing point has got 10 million shares from last Monday out there. Has not tested it, so it's not really providing us with a ton of information out here. It certainly is not breaking to the downside either. Pulling back, yes. Regeneron Pharmaceuticals, REGN, that's off 966, about 2%, a little under 2%. Its swing point from last Monday, 1.7 million shares. You're back inside with 532,000. It does look to me like that level will be tested. And that is 480.50 before it provides you with any additional information. Also, we've got Netflix to the downside, NFLX. You're down $9 and change, 8%, 24 million shares out here. That's trading into 59 million shares, but it needs to reject the top of that swing point, 109.63. Otherwise, it'll continue to do a retracement. Remember, you're going to go do 382, 618, 786, and then it can make that 100% move and get down and test the low of 85.50 out there. Let's see if there's anything out here moving to the upside. You've got, what do you have? Patrick Industries. Looks like the first stock, dollar-wise, $6 to the upside, 16%. One heck of a day. I don't know what they did out here. Oh, they completed the acquisition of somebody out here, so we won't really pay attention to that. In any event, folks, Dow's off 383. Remember, those G's are in place. If there's a bounce, well, you'll know why. Stay tuned. Our man David White is up next. It's a wonderful Tuesday here at TFNN because after David, we got the Tom O'Brien Show and Andy Heck to take it on home to me. I think that's how the Dave Mason song goes. Have a great Tuesday, folks. Look forward to seeing you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.